So let's start this video off with what some people might find as triggering statements. Yes, I believe the bottom is in for Tesla. Yes, I believe Tesla's earnings are going to be a positive for the stock and could be a huge positive for the stock, depending on what is ultimately announced. Here in this video, I will explain exactly why that is, and I think it's a little bit more simple than a lot of people would like it to be. We are also going to look at option positioning for this upcoming Friday, because Wednesday we get earnings, so any positioning in the options market for Friday is telling you how people are feeling or positioning for Tesla's earnings themselves. We will also go over the fact that the S&P 500 hit a new all-time high on Friday and what some of your Wall Street quote-unquote experts are saying about our markets. And yes, there are risks out there associated with stocks hitting new all-time highs. A subsequent pullback, well, is not going to be good news for Tesla. When could that be, and how severe could a pullback be? We need to talk about that as well. So we have a lot to get into. That is the tip of the iceberg of all of the information you will walk away with by the end of this video. Hit that like button and subscribe to the channel if you like this video, you find perspective out of it, and you just appreciate an open, honest, transparent opinion. Whether I'm right or wrong, I share what I believe. And I do have, in this case, about $1,000 specifically in shorter term trades on this information alone. Not to mention my tens of hundreds of thousands of dollars in Tesla stock. So let's keep this so simple it is stupid. Why are people bad at trading generally? Because they use emotions. When a stock is going up, people think a stock is going to go up forever in a straight line. When a stock is falling, people think a stock is going to fall forever. So typically what happens when you get to a capitulation moment, to whether that could be to the upside or to the downside, most of the time that's typically coinciding with downside when people are capitulating. Well, that just means that you've gotten to a point where everyone is getting so negative, you usually see a reversal at that point. Because in the markets, everyone cannot be right. This is vitally important that you guys understand this. If a stock keeps going down, everyone thinks they have everything figured out. Everyone can't win in the markets. It's as simple as that. If everyone is winning, who's paying out the winners? A small group of losers. If, the stock reverses, then who wins? A small group of winners. That's how the markets work. That's why not everyone is successful trading, because there's typically going to be a small group of winners. Long story short, I can make a whole video on that, the psychology of trading and how things actually work on a fundamental, deep level. But the point is simple. It's so simple, it's actually stupid when it comes to Tesla. And I don't understand why so many people are so negative on Tesla right now. Tesla has fallen 22% since December 28th's high of about $265 per share to Friday's low of about $207.56. You've fallen 22% before earnings. Now it makes sense why everyone is bearish. As I explained previously, the last 3 earnings in a row, Tesla has fallen more than 9%, less than 10%. So like 9.7%, 2 quarters, and I think the last quarter was like 9.3%. The day after earnings, like the next day in which people get to react to Tesla's earnings. It's pretty easy to say, hey, let's short Tesla, let's sell Tesla now because earnings might be bad. Markets have already gotten ahead of that. So at this point, I see so many people that are negative, so many people that are, justifiably negative to a certain degree. Yes, Tesla is cutting prices, but we still don't know what effect that's going to have on margin. So maybe it's not that big of a deal after all. Now, I will give some credit. Some of the price cuts we have seen recently have been quite large. But the point is, right now, Tesla stock is priced for a very bad earnings, a very bad guidance, and bad news overall. A terrible earnings call. I am not willing to make that bet. So when everyone thinks Tesla is going to continue to fall, just look at the comments of this video, of the last video. People are saying Tesla is going to hit $100. $150. Sure, is that possible? Of course. If what we talk about next on the broader markets, if we do see a larger pullback and Tesla does not have good earnings, sure, of course, you could hit 150, potentially lower than that. Anything's possible in the markets. But let me say this. The next $50 move, whether we go to, 262 or whether we fall from here to 160, what do you think is most probable? What do you think has the highest probability? I'll tell you right now, it's not that Tesla stock goes back to 160. It's that Tesla goes back to 260. And that is because the stock has already fallen so much. I do also want to take 1 second to acknowledge a comment that I've heard many times. Something along the lines, let me paraphrase here, is Elon trying to not let Tesla stock go higher because he does not have a compensation package? And I do not think that is the case. A compensation package for Elon is not going to be like anything you've seen before at this point. It's going to be a long-term compensation plan, probably the first tier being $1 trillion market cap, but a very low kind of additional gain that he would receive. $2 trillion is where things really start to open up compensation-wise. $5 trillion would likely be huge compensation, and $10 trillion would be, well, even larger than that, just for an example. So I don't think Elon is necessarily deliberately trying to keep Tesla stock low because of compensation reasons at this moment. So I think, long story short, everyone is far too negative on Tesla stock at this point. Since the start of 2024, you have had very few green days. It's been basically straight down. And when retail investors, a lot of people that have been with Tesla stock for a long time, when they start to get bearish, that's typically when you want to get bullish. Again, it's so simple, it's stupid. Think about what Warren Buffett says. If you want to make money, you buy when people are fearful, you sell when people are greedy, right? You don't want to be fearful when others are greedy, be greedy when others are fearful. That's the actual saying. But when a stock is just falling precipitously for, what may be bad earnings, but could be good earnings, it's typically not a terrible time to be buying some stock. And I think we've gotten to the point of extreme fear. I mean, if you take a look at stock twits over here, the sentiment gauge, well, 1 day ago, on Thursday, you were at 10 out of 100. You were extremely bearish. On Friday, you're 98, so you're extremely bullish. The sentiment has started to flip. But what we have been seeing, what I have been going over with you guys for a while now, was extremely bearish sentiment, extremely low message volume. On Thursday, the message volume was 38. Not a lot of people were talking about Tesla or excited or bullish about Tesla. Now, on Friday, 94, extremely high message volume. The participation ratio as well has been on the lower side at 38. I expect this will increase. That just means there's not that many people making comments, talking about Tesla. The message volume being extremely high on Friday maybe shows that we start to get a higher participation rate, and that would be good news. But it seems like the tide has started to flip a little bit. But again, people have been watching Tesla fall so many days in a row now. There's going to be a lot of people that don't believe this could be a rally for Tesla until we're 250, 260 again. And that just means you potentially miss out on quite a bit of profits from now until 250 or 260. But I want to make it very clear, I don't know Elon personally. I don't have a crystal ball. I can only speculate on what can be announced on earnings, so I don't have all of the answers. Maybe we do get a terrible earnings. Maybe Elon is a disaster again on the earnings call and says something the markets do not like. Of course, it's possible the stock falls following earnings, but you're going to have to get very bad news, an utter SHIT show, to get Tesla stock to fall another 9% on earnings. Even if we don't get any good news, I still expect Tesla stock could probably rally because it wasn't that bad, or it could have been worse. If you've been in the markets for a long time, you know this narrative. Think about an end phase, or think about not Mattel, some of the other chip companies, right? When it's so bad, when it's so bad, investors say, hey, it could have been worse, even though the earnings were terrible, because maybe this is the bottom. I wouldn't be surprised if that did happen with Tesla as well. Now, I personally believe we're not going to get a solid commitment on the $25,000 vehicle, but I do believe Elon is going to make some references to the vehicle that sound more timely than not. I think he's going to say something along the lines of, you will hear more information by the end of 2024. We may, get to some form of production by 2025. See, Tesla does not want to cannibalize the lower price Model 3. Tesla doesn't want people to wait for the Model 2. So there's a lot of speculation whether or not we would actually see a Model 2 announcement in 2024. Some people like Gene Munster think probably not. I think we might, because what's to say the Model 2 is even going to be sold in the US, at least initially? Maybe they say, hey, we're going to start production of the Model 2 by the end of 2024 for outside markets. And then we might open up the Model 2 down the line for the US or China or Europe. But again, the point is, I am expecting some new announcement for the Model 2. Just think back to what Elon just said a couple of days ago, maybe a week or two ago now. Time seems to fly these days. He said that there are a few new products coming as well. Now, what does that mean? Let me know down below in the comments section. It probably means a Model 2, $25,000 vehicle. If we think about this logically, it's not going to be likely as difficult to produce a Model 2 than a Cybertruck. I think a Cybertruck is like top of the charts as far as difficulty to produce. A Model 2 should be a lot easier, and production could be a lot smoother. Now, I think the Model 2 announcement is the holy grail of good news. There could be other smaller pieces of good news as well that could have the same effect on Tesla stock and cause Tesla stock to rally quite a bit. I just tend to be an optimist, and I do think there's a lot of signs pointing towards we might get definitive details on the Model 2. Bottom line is, your risk to reward being long in Tesla right now is a lot more attractive than it has been in a very long time. It's as attractive to be long in Tesla, I mean, as it has been since November, when Tesla went from 200, where we are now, to $265 per share. Plus, you are getting back to prices where valuation makes a lot of sense. Now, let's take a look at the option activity for January 26th. As you can see here, the total open interest is 59.32% to the call side, so there's more calls than puts for this expiration, with a put-to-call ratio of 0.69, and you also had a put-to-call ratio volume-wise on Friday at 0.69. So not quite a 2-to-1 ratio, not quite 2 times as many calls than puts, but getting pretty close. And the first couple of days of next week could obviously change that as well. Open interest on the put side at 40.68%. Now, as you can see here, the contract with the highest amount of open interest, by far, the 225 call. You have open interest of about 44,000 with volume on Friday of about 23,000. Beyond that, you do have a lot of activity around the 200 put. You did have volume of 20,000 on Friday with open interest of 17,000. The 220 call would be next up behind that with open interest of 17,000 as well and volume of 27,000 on Friday. So the 220 call actually had more volume than the 200 put on Friday. The 230 call also is quite elevated, about 30,000 contracts that were traded here on Friday with open interest of 15,000. The 250 call had volume of 21,000 with open interest of 15,000. Other notable strikes would be like the 235, open interest of 8,000, volume of 20,000. 240 call, open interest of 11,000 with volume of 13,000. Now, I think it's pretty clear to see here. Yeah, most of the option activity is pretty bullish on Tesla stock. Even the 250 call expiring by January 26th. So that would be quite a rally. That would be like a 20% rally from here. You did have open interest of 15,000 with volume of 21,000 on Friday. The next week following next week, so expiration of February 2nd, you're, even more bullish for that week with open interest of 60.49% to the call side An open interest to the put side of 39.51%, put to call ratio of 0.65, and you did have a put to call ratio on Friday of 0.62. Volume on Friday was 61.63% to the call side, 38.37% to the put side, with the strike with the most option activity. The 220 call, about 15,000 for open interest and volume of about 9,000 on Friday. Now, why is this kind of interesting? Well, the week after the earnings week tends to be where a lot of people position also. I know a lot of people like to, trade weekly YOLOs on earnings trades, but for more so sophisticated investors, you tend to go at least a week out because you want to give yourself a little bit more flexibility, right? You never know what's going to happen on earnings. The stock could fall, rally by the end of the day, and then continue to rally for another week or so. And if you're playing weeklies, long story short, you put yourself in a bad position. So next week options are very telling to me as well. And the fact that they are even more bullish than January 26th expiration, that's a very good sign. Now, something else I want to point out is with all this bullishness in Tesla options market, as you know, Tesla earnings, it's a big risk to Tesla stock. Well, options were originally created and mostly still used for protecting larger long positions. So in theory, right, you should use options to hedge out your large positions. So you would actually expect to see more bearish positioning than what you're seeing now. Because, why would you not? If Tesla could fall big on earnings, well, you would want to protect your position, right? If you have hundreds of millions of dollars in Tesla, 10, 20% drop is nothing to sneeze at. The fact that you are not seeing massive protection getting put on Tesla stock is a pretty dang good sign. Tesla's probably going to do well following earnings. Now, by making this video, keep in mind I could be putting my neck out there on the line, but I really don't care. This is what the data says. This is me interpreting the data, and I'm not afraid to be wrong. It's also worth mentioning that the short sellers could be in a world of trouble if Tesla does react positively on earnings. As I have mentioned multiple times now, cost to borrow fees around 10% for Tesla stock indicates there's a lot of demand to short Tesla, to get their hands on Tesla stock. Think about it like this. If they're willing to pay 10% just to have the opportunity to short Tesla, what do you think they expect Tesla will do? 20%? Maybe more than that? You get the idea. So when there's a lot of demand to short Tesla stock, there's a lot of shorts taking out short positions. If you do get a rapid bounce, something that is unexpected, you usually prompt a lot of those short sellers to then cover on those short positions they just recently took out. Especially if you get, let's say, a $25,000 Model 2 announcement to come some point in 2024. Oh boy. Yeah, they're in a world of trouble. Tesla's EPS for Q4 earnings is expected at 73 cents. I think it's likely that Tesla's EPS could come in 85 to 92 cents per share. Based on my calculations, you could see 92 cents per share. Would I be surprised if we come in the high 80s? No, that would be just fine. Anything above 73 cents is going to be great news. But again, that's not what's going to move Tesla stock. What's going to move Tesla stock is what happened with margins and where markets think margins are going next. Then it's, everything else. The Model 2, $25,000 vehicle. Let's say, for an example, Tesla comes out and they say, hey, we don't know when margins are going to bottom. They could go a lot lower from here. I would not expect Tesla stock to do well unless we got some kind of $25,000 vehicle announcement. So margins are very important. I think margins are closer to a bottom than not. And I think we should actually get recovery in margins coming in Q4 and potentially in Q1. It really depends how much costs were offset. As Elon and the Tesla team said on the last earnings deck that we got, some of the upgrades we've seen to Giga Shanghai, Giga Berlin, Giga Texas were to improve efficiency and to lower cost. So how much did that actually pay off? I think that's a big question that we need answered as well. The Daily said after hours on Friday that Any early signs that the labor market could falter could also trigger policy adjustment, which will mean, if we start to get a spike in initial jobless claims, if we start to see more companies laying off, unemployment starting to rise, that could mean the Fed might switch from fighting inflation to more so managing the business cycle and the unemployment cycle. Goldman Sachs says, quote, inflation news remains very favorable. The U.S. has led the way, and we now expect that core PCE inflation will average just 1.9% annualized over the 6 months through December. We expect the Fed to start cutting the Fed funds rate soon, probably in March. At the same time that U.S. stocks are hitting new all-time highs, Chinese stocks are back to their 2009 lows. Something is definitely wrong in China. Now, the biggest risk for Tesla stock, believe it or not, at this point, I don't think it's Tesla specifically related. It is the fact that markets have hit a new all-time high. Now, we're no longer pricing in the first rate cut in March. So that's actually great news for Tesla stock for the broader markets, because we went from pricing in with almost certainty the first rate cut in March to now not pricing in a rate cut in March, and stocks have hit new all-time highs. So we have lowered expectations of rate cuts. Stocks have been able to prosper during this time. Prosper is in air quotes. The index has been prospering. The average stock, well, not so much. But this dramatically raises the odds that we will get a dovish Fed Jerome Powell coming on January 31st. If markets were still pricing in 7 or 8 rate cuts, we were going to have a very hawkish Fed Jerome Powell. Now, the markets right now are pricing in 1, 2, 3, 4, 5 rate cuts. That's more reasonable. That's closer to the Fed's projected 3 rate cuts in 2024. I don't think Powell is going to have a problem with 5 rate cuts as long as we continue to price that in heading into January 31st. Now, the other big risk to markets, specifically to Tesla and to our broader markets, is earnings coming in from big tech the same week we get Powell, January 31st, through really February 2nd. February 2nd is going to be that Friday, is bad earnings from those big tech names. Now, that is going against what we have seen over the past 2 years, right? Earnings have been good from big tech, or okay, largely from big tech names. To sit here and say big tech is going to have a disaster earnings season would be very unlikely based on what we have seen recently. Now, the question is, how does it come in, and what are markets expecting? So as we know right now, the expected EPS growth for the S&P 500 is 11%. Maybe markets are really comfortable with 8 or 9%. Maybe earnings come in at 8 or 9%. Is that okay for the markets? Is that enough EPS growth for the S&P to justify valuations? Maybe. I think a 5% or lower projected EPS growth rate for 2024 would be bad news, but I don't think it's going to be an utter disaster just yet. I don't know. Who knows, though? Maybe big tech earnings are terrible. And theoretically, if Tesla did not see a big bounce, as I expect, on their earnings, and big tech earnings are bad and Powell is hawkish, that's how Tesla stock could ultimately fall to, let's say, 150 or potentially lower than that. But I think if we take probabilities into account, it's more than likely we're going to see a positive reaction from Tesla stock following Tesla's earnings, given you have fallen 22% from December 28th's highs to what we've seen on Friday. I think statistically speaking, if you want to look at probabilities, there's a greater probability that earnings come in better than expected. About 80% of the time, Magnificent Seven has beaten expectations. So I don't think that's necessarily going to dramatically change this time around. I think Powell's the biggest wild card. How hawkish is he? How dovish is he? Does the Fed announce the end to quantitative tightening? Maybe they go into an easing stance. If that were to happen, we could be looking at much more upside for a stock like Tesla, and probably a broadening out of our markets. So let me know what you think down below in the comment section. Personally, again, I think Tesla stock over the next couple of weeks could probably rally back to the 250s, maybe the 260s. That would not, I would not be surprised if that happened. If we got a $25,000 vehicle announcement, Tesla stock could rally a lot higher than that. Now, again, if everything goes sideways, Tesla stock could easily fall back to, you know, the 150s or so. But I think the markets would be in a really, really, really bad place if that were to happen. More than likely, if we get bad commentary from Elon and big tech earnings are kind of negative, nothing to write home about, and Powell's hawkish, you probably see limited downside down to about the 190s. So I think the risk to reward profile on Tesla looks very attractive right now. For full transparency's sake, I do have about $1,000 in 250 calls expiring by February 2nd. Looking to just make some of those free and hold some for free heading into earnings. If you guys want to learn that strategy, come apply that strategy with us potentially. None of that's financial advice. You could end up losing all of your money, especially if you don't understand the earnings strategy. You don't know how to use IV in your favor, and you don't have diligent risk management practices, you will lose all of your money. So definitely do not trade that. You are the only one that is responsible whether you make or lose money. But if you want to come trade with us, check out that link down below in the description of this video. You guys have a great rest of your day, and you guessed it, I'll see you in the next one.